Hey everyone, it's Mark the Tax Wit with Tax Wit Wednesday. It's mid-year. We're looking in August. We're getting close to the next tax year. What can you do now to help make the tax season better? Well, the number one thing you can do is look at your W-4 and your withholdings and see if you're having enough taken out. So if you look at this is the W-4 Employees Withholding Certificate. This has been updated every year for the last 3 years, and it continually gets worse and worse. And whatever you do on this, it's not going to be a be-all, end-all fix for why you owe money or why you get a huge refund and why it fluctuates. This is just something that's a tool that you might want to look at because this is what a lot of people haven't updated in years, and they continue to owe money. So this is something you can look at. Here's a W-4, all right? So up top, normal, this is kind of what has always been. And we have the first name, middle initial, last name, address, city or town, and your social security number. That's the most important information that's on here. And then you come into this box. This is your first decision you've got to make. Are you single or married, filing separately, married, filing joint, or qualified widower, or head of household? Only 3 decisions. Seems like a simple answer, but you've got to be careful. If you are single, then definitely just check the single box. If you're married, you have 2 options. You can do married filing separately and then have more taxes taken out. I suggest you do that if both of you make a good amount of money. Or if you're newly married and you're not necessarily sure what your taxes are going to look like. The other option, married filing joint or qualified widower, if you have a dependent child and you've had, your spouse died in the last 3 years or last 2 years really, then you could be a qualifying widower. The other one is head of household. That's only if you are kind of a single parent or you're married and don't live with your spouse. Those are the only 2, and you have a kid that's living in your home or you're looking after your parents. Those are the only 3 options you have. Again, there's another option that might be on there called married, but at the single higher rate. That would be my next suggestion, especially if you're owing money, you might want to check that box. Down here, it says complete this step if you hold more than 1 job. All right, this multiple jobs thing, I'm going to go through it, but I'm going to tell you there's a little estimator app on irs.gov, W4 app right here. Try it, see what you think. It can tell you what to do. I haven't had anybody have really good results with this yet. So next thing, this is the next section you have to fill out. Claim dependents. You want to put, if you have kids here, for each kid that you have, you're going to put $2,000. Now, yes, we know the child tax credit is $3,000 this year, but just humor me and humor the IRS. Just put the number of kids you have who are under 17. And yes, if they're under 18, it actually for 2021, but I don't want you to mess with that because that just means you'll get a bigger refund. Okay. Next thing, other dependents, if they're over 17, you put those numbers here. So it'd be 500 and 2,000 if you had one 18-year-old and one 12-year-old. That would be how you'd put that money. But if you're owing taxes and you're not sure if you're going to be, having enough income tax taken out, you might want to leave this blank and put 0 in line 3. That's something that could mean you're going to have a bigger refund. It also would be something you would do if you don't claim your child every year. If you're a single parent and you switch claiming your child every other year, I would put 0 there. Step 4, other income from jobs. If you want tax withheld from other income, that means if you're getting Social Security or if you're getting unemployment or something, you don't have taxes taken out, you can put that money on there on other income. Deductions, if you expect to claim deductions for standard deduction, you could put that on there. I don't necessarily think you'd want to do this, but it is an option. And extra withholding. This is how much, if you want an extra $50 taken out of pay period, you would put that number here on 4C. Pretty important step because if you're falling short, this is a way to make up for it. Then you sign right here the employee's signature and date it. And then down here, employers only. I know it's tempting to put something on there, but just leave that blank. Here where it gives you some more specific instructions, which you can look through. It talks about the estimator and then the multiple jobs worksheet. You have 2 jobs or 3 jobs. It tells you to put the amount you're making annually here. And you take that information and you go down here to this worksheet. So let's say one of you makes, if you're married filing joint, one of you, the higher paying person, makes between 60 and 69,000. And the second job, the lower paying job, is between 40 and 49. You would want that number, 4,490, would be put in the qualifying tax grid. So you would try to put that on there, and then they will calculate to take more money out based on your 2 jobs. Some people don't like telling their employer how much their spouse works. This is obviously a concern for a lot of people. So you want to be careful. If you're privacy questions about this, you might not want to fill out this worksheet, but that's what it's asking for. But that number would then go back up here, and you'd put if you have 2 jobs, you're married, you using the higher paying job row and the lower paying, find the value of the intersection of the 2. So that's where we'd put the 4,490 with right there, and then enter the number of pay periods per year of the highest paying job. So you might put 26 if it was every other week, and then divide the annual amount, line 1 or 2C, and you put that result there, and then you mark that information up here on 4C. And that's how you know how much extra to take out if you just don't want to guess at $50 or $60. This is a good idea to update your W-4 every year, especially if you have changed your married situation. If you've gotten married, I would leave it alone until you file taxes jointly for the first time. If you are divorced or are no longer going to be filing or claiming kids, that is crucial that you go in and change your W-4, because you're going to be having less taken out because they're thinking that you're going to have a child and a spouse, and that's going to make you owe a lot more in taxes. So getting married, not as crucial to update your W-4 until next year. No longer married, definitely go in and change your W-4. So I'm hoping this gives some good information about how to fill out your W-4, how it works. Again, this isn't telling the IRS anything. This form is just for your payroll department, so they're estimating how much to take out. It's not. So a lot of people say, well, what if I say I'm single, but I'm really married? It doesn't matter. The IRS doesn't care. They're not looking at this sheet. This is just your payroll department trying to estimate how much in taxes to take out to help you make sure you're covered when you come to file your taxes. So don't think you're doing anything wrong if you say you're single or married filing separately, even if you're filing married. Don't think you're doing anything wrong if you don't claim any kids on the child tax credit part, even if you're going to be claiming dependents. It's nothing to do with the IRS as far as what's going to happen on your tax return. It's just going to affect your W-2. All right, that's your Tax Wit Wednesday. It's a long one, but I think it gives you a good breakdown of how to fill out your W-4. Again, I can't advise you on how to do it. I can just tell you what the results are going to be. It's not as simple as the old days where you could just do 0 or 1. 0 if you wanted a big refund, 1 if you wanted to have a break even, and 2 if you wanted to push it and maybe even owe. That's Tax Wit Wednesday. We'll see you next time.